risk is a reality. The possibility that an event that can cause you discomfort, that can be taking you off the objective, that can make you lose is a risk. Okay? You see, we need, as we manage the rest of the things in business, we also have a plan of managing that risk. That is what we call risk management. It involves identifying all possible risks to you. Okay? Calculating the cost of the loss to you, right? And then managing that loss. We will be looking at alternative ways of managing that loss. Before I go deep, we are focusing on business risks, but we also know that there is personal and there is family risk. And as we have, probably you have joined us in training on financial planning, personal financial planning. One key thing to remember is that some of the personal issues you've not taken care of become business issues. What do I mean? If there is medical concern, if somebody falls sick in the family, God forbid, and there is no medical cover, you need money. And on average, if you had not set aside money for that, you take the money from the business. So it was a personal problem which becomes a business problem. And that's why, even though the purpose of presentation today is about business risks and business insurance, I would like to emphasize at the very onset that it's very important for you to have personal insurance. It's some kind of assurance. Once again, my good bank assurance people, I think this was the best day that you come, because you can see there is so much that is required here. Joseph and Simon, many of us do not have insurance. And by the way, these statistics represent exactly what we find in the society. How many people are covered by insurance? It's amazing. A country like Kenya, the percentage is so low. Okay, some people would put it at less than 10%. In developed countries, usually it's quite high, because I think the level of awareness of insurance is very high. These are the things we want to cover. And perhaps remember something else, that there are tax benefits. If you attended the tax training, we mentioned these. There are tax benefits insurance. The cost of that insurance is allowable expense for you, right? And remember, if you fell sick and you pick money from the business and you go pay for your sickness or whatever, that will not be allowed as a business expense. But had you bought an insurance cover for you, your family, and business members, right? Of course, it has to be for the business. That is allowable expense, which reduces your exposure. Life assurance and education assurance. The premiums you contribute up to a maximum, okay, of 60,000 a year is allowed as a deduction from your taxation. So you are missing out certain tax benefits for not having the personal insurance. I wanted to cover that about personal insurance, so that now we can concentrate on the business insurance. You may want to look at ways to minimize this. What are these? You see, they are basic things that you do normally to minimize your risk. You install a security system. You train. You appoint a health safety officer. You have a cover of health and safety for your employees. All these are ways of reducing risk. But not all the time it works. That's why sometimes you want to transfer the risk to a professional institution to manage for you. Okay? You take out insurance cover to transfer the risk to an insurance firm, which is designed to manage those kind of risks for you, so that when the event happens, they cover it. Notice in the others, you still manage the risk, yes, but you assume the responsibility of the risk. When you transfer it, the institution you transfer to assumes the responsibility of it. So you want them to cover it for you. They take the cost. Now, insurance, therefore, is a way of transferring risk. Okay? You're transferring it to who? An institution. First, it is registered. It is regulated. It is professional. It has experience of managing those kind of things. Why am I emphasizing this? Some times ago, this gentleman I meet, he runs transport company, okay? And he has got his also personal cars. He was a little old and maybe also a bit old school. And he would tell me this, I would not buy insurance. I would rather put that money in my business, multiply. And then that way, I buy a new car. That is confusing concepts. You see, it is true, it makes sense. You put money in your business, you multiply whenever you want to buy a car. Yes, the time the car may get an accident may not be the time you had the money to buy it. It may have an accident just a couple of days after you have bought it. You have not even accumulated resources to replace it. What does that mean? It means a challenge. So managing risk must be seen as separate from managing the rest of the affairs of the business. And transferring risk becomes one of the smart ways for a business to cover itself. You see, one of the things that will be good for you when you have the question of what then should I insure is to try out on this tool of assessing the risk likelihood and the risk impact. Notice that kind of box with many boxes in it, squares in it. On the upper side, likelihood. What is the chance the risk can happen? On the lower side, effect, impact. If it happens, what would it be the effect to you? Okay? Now, notice what it says. It starts from unlikely to very likely. Then it starts from minor to major impact. Notice at the very extreme, the red one is the highest level. It is what? It is high likelihood of happening. If you're on the road, a likelihood of an accident happening is high. Very good. And impact. What will be the impact to your business if it happens? Now, what do you need to do? If the impact is high and the likelihood is high, my friend, you are better off transferring that risk to somebody else, so that if it happens, they cover you. And you could be saying, okay, if I'm transferring it, then them, what are they going to do? Notice they are using a science of managing risk. They pull together thousands and thousands of people like you. Although the likelihood is high for you alone and impact is high, when you pull a lot of them together, then you find the percentage of those that will be affected at a given moment is low compared to the amount. That's why insurance needs to cover very many people. You see, and that's why I say they have experience, they have the ability, they are regulated. So then they have the ability to assume the risk better. Okay, and I've explained the others. If it is high, also transfer. If it is medium, you can proceed. Probably just look for ways of reducing that risk. If it's unlikely, well, proceed, then you don't have to worry. Now, it's good to remember some common definition, okay, that will keep talking. There is you, your organization, your business. There is your staff, your property, right, in your business. There is the other person, the other guy, someone who is not related to you and is not named in your insurance policies, which means he is the other guy, all right? For instance, the guy on the road when you're driving is the other guy. If you hit him, he was not in your business, he was not in your policy, all right? But then that's what you talk about, the third party has to be covered. So why don't we then look again, what are the benefits of insurance? So that even as we are going to the various types, when we know what it is doing for us. Some of them are obvious, but I think reminding ourselves this good morning is very important to help us structure our business, organize our business, manage our business better. You see, the obvious and most important benefit is the payment of losses. So it helps avoid interruption. And the second one related, managing your cash flow. You see, insurance provides payment for covered losses when they occur. Okay? Therefore, the uncertainty of paying for losses out of pocket is reduced significantly. You see, put in a different way, you're talking about managing or dealing with that which you are good in. You are not very good in managing those losses. You're giving it somebody else so that you maintain your attention to your key area, which is managing risk. Another benefit of complying with legal requirement. Some of the insurance are an expectation. Okay, workman compensation is a requirement for you to have. Okay, covering your staff for medical is required. Okay. Now, another one is promoting risk control. You see, insurance policies provide incentive to implement a loss control program. Sometimes you might see it as a loss or at a cost, okay? But incidentally, it helps you do things a lot better. When you insure, it doesn't mean that you can just be as careless. Incidentally, there are certain expectations for you to do, which makes you do business a bit better. Okay, efficient use of your resources. Okay, so that the money is put where money gives you best returns, and then now the risk is worried by somebody else. Okay, right? Sometimes it is good for credit. Okay, some of the insurances you have may be used to guarantee a loan. Okay, and perhaps most important is to reduce your social burden. Do you want, when you something gets wrong, you have to borrow from business, or you have to start doing harambes with the family? Okay, because of this and that. Nowadays, I notice many times, God forbid, when there's a medical issue, people wanachanga, lakini wanauliza maswali, alikuwa na insurance? The first and most important is to have an agent. And we're going to talk about this a lot, about agents, insurance. What do you like, of course, but of course, what do you trust? What are the things to do? Of course, look around. As friends, family, other business owners, Bishara club members, talk with them. It's good to have somebody independent, okay? Well, who work with more than one insurance, okay? And able to provide options, not one who limits you, okay? Right? Your agent will be able to help you determine the best value for money. It's good to know cheapest is not always the best. Sometimes you go for cheap because you want to reduce our cost of operation. It's not always the best, right? And if you don't feel comfortable working with or trusting an agent, you probably might need to find a new one, okay? It's about relationship. It's about relationship. If somebody is encouraging you to lie or to omit information, to do things that are not right, probably that's not the person you want to trust. Most likely that's not a person to go with. Okay? Now, it's good to note when you're choosing a company provides policy, bills you for the premium, and pays you covered losses. So it's good to look at reputation. Okay? Consider the value covered, not just about the premiums that you pay. Ask an independent agent about the experience of that company so that you're sure where you're going. Okay? And of course, ask about the rating of the company.